University in the schools and colleges team. So our team do careers fairs, we help out with open days, and we also organise on-campus events and come out into schools and colleges to talk about things like student finance, personal statements, applying to university and things like that. So I'll give an overview of the Student Finance England system today. So it's worth noting that this talk will focus on applying to universities in England and the finance system and how that works. And there's also some figures for illustrative purposes in the presentation, which will apply for students starting university in September 2026. So the finance system for students starting university in 2027, so any year 12 students perhaps, will look slightly different next year, but there's still lots of this talk that should be relevant for you. And I'm happy to go through any questions we've got at the end. So I'll talk about student finance and the funding that might be available to you when applying to universities. We'll go through the cost of university as well. And then we'll also talk about the student finance repayment process. Now, the repayment process is the thing that put me off the most when I didn't understand it about student finance. I know that student finance is one of those things that if you don't understand it, it can seem like a bit of a scary thing. But hopefully this talk will reassure students on the call and parents on the call about how it works and why it's actually a system in place to help students access university that might not have otherwise been able to afford it. So I'm sure that people on the call will know that there's two main costs associated with going to university. These can be broken down into two main categories. So there's the tuition fees and the maintenance costs. So the tuition fees are the cost of the course itself, and that will also extend to covering any sort of academic life and core services relating to university. So thinking about wellbeing services, extracurricular things you might get involved in. Then there's the maintenance costs. So these are your living costs, and these costs will differ person to person. It might be depending on how much your accommodation costs, or if you're travelling to and from university from home, things like food, course materials, phone bill, and things like that will be covered under your maintenance costs. Fortunately, there are loans in place to help with both the tuition fee and the maintenance costs. So the tuition fee loan is in place to directly cover the cost of the course itself, or the tuition fees. And you might have seen sort of in the news recently that tuition fees for students starting university in September 2026 will be £9,790 per year. I appreciate this is a lot of money, and there's not that many people that have this kind of money to pay university up front, which is why the loan is in place. It's non-means tested, and this means that anybody that is eligible for student finance can take out the full tuition fee loan. So they won't be using things like income, or they won't be looking at whether you're living at home or away. Anybody that's eligible for finance can apply.
Hello,
and I'll cover some eligibility points later. Taking out the tuition fee loan is not compulsory. You can pay you can pay the full tuition fee if you want to, or part of it if you wish, but it is there in place if somebody wants to take out part of it or all of it. The way it works is once you are registered at university, the university will let the student finance company know that you've started the course. Then they'll release the money directly to the university. So you won't see the tuition fee loan come into your account. It goes directly to the university. And each year you can choose whether you want to take it out again. More and more universities are aware that the tuition fee is an awful lot of money, and they are very focused on making sure that students are getting value for money out of their tuition fee. So it's not just the cost of your teaching that's covered. You should be thinking about, what am I getting for my money, when you're thinking about which universities you're going to. So it'll be covering things like the Students' Union, IT facilities, any administrative support, any wellbeing support, pastoral support, library access, books, journals, trips perhaps, and links with industry will all sort of be considered within the tuition fee loan. So it's not just the cost of the teaching. Then we've also got the maintenance loan. So this is a little bit more subjective when it comes to determining how much you'll receive. And I'll go through the figures on the next slide. The reason it's a bit different is because it's due to the fact that it's a means tested loan. So student finance will look at your personal circumstances, such as your household income, whether you're living at home and commuting to university every day, or if you're living away from home in halls of residence. It will even look at whether you're studying inside London or outside of London to determine how much you might be eligible for. All students are eligible for some maintenance loan support because there's a minimum amount that anybody that's eligible for student finance would be eligible for. And for any students on the call, this is the loan that you do receive in your bank account 3 times throughout the year. So it's important to get a good sense of budgeting so that you can plan out just how much will be available for you to spend each month. Both the maintenance loan and the tuition fee loan do need to be paid back, but not until you've left university and your income is over £25,000 per year. So these figures do change slightly each year, but this is what's been confirmed for students starting university in September 2026. So the minimum entitlement at the top of the screen is £4,013 per year. This is the amount that's non-means tested, so anybody that's entitled to student finance can take out the minimum amount for the maintenance loan. Following on from this, you can see the maximum entitlements for the maintenance loan depending on a student's living and studying circumstance. So how much you might be eligible for is a sliding scale between the minimum entitlement and the other figures shown above. And what determines where you land on the sliding scale is based on your household income. Yeah, and I've got another slide that goes through some of the amounts you'd be eligible for coming up. So if there's any questions about that, we can always come back to that at the end as well. So student finance will need to determine whether you're eligible for student finance by assessing your household income, and whose income they assess depends on whether you're classed as a dependent or an independent applicant. So an independent applicant is classed as somebody who is financially independent of their parents or carers, and therefore parental income will not be considered. If there's lots of different criteria that an applicant may fall into that will determine whether they're an independent student, it's best advised to look on the student finance section of the gov.uk website if you think you might be classed as independent, as they'll ask for evidence, and you might need what you need to provide will depend on which condition they think you'll meet. And then the categories where perhaps most students will fall into is the dependent category. So for parental household income categories, so this is for anybody that is financially dependent on their parents. They'll look at the combined income of both parents if they're still living together. They will look at the parent's income that the student normally lives with or spends the most time with if the parents are divorced or separated. Or they'll look at the parent or step parent that the student spends the most time with, living with, that is, if their parents have separated and remarried or have a new partner. So whilst not being able to comment on every category that everybody will fall into, these generally give you quite a good indication as to how to calculate your household income and what they're going to be looking at. So this table provides you with a rough idea of what you may be entitled to, depending on your household income. So students receiving the higher amounts in their maintenance loan would be those whose household income totals £25,000 per year and below. You can also see that where you're living determines how much you'd get as well. So say if your household income is £25,000 or below, you would be entitled to the maximum maintenance loan amount in each category. As the household income goes up, the amount you'd be entitled to does go down. I'm also aware that for some people on the call, the maintenance loan you'd be entitled to might not cover the cost of the accommodation you're looking at. So I'll go through at the end other ways you can think about earning money at university as well to help with your living costs. I need to make it clear that most people on the call will have circumstances very different one to one another. Whether that's a form of different household incomes, where you'd like to study. So we can't answer to everybody's individual circumstance, but this table does give a good indication. And I will say that on the student finance website, there's actually a student finance calculator where you can put in a few different bits of information about, where you think you're going to be studying. I know you don't know where you're going to be studying yet. Household income, whether you require extra support through DSA or anything like that, and it will let you know how much you're likely to be entitled to. So it's well worth having a look at that now, even before you can apply for student finance. So I'll just cover a few points about eligibility. So to be eligible for Student Finance England, there are a number of criteria that you need to meet in order to be able to apply. So these fall into three main categories, depending on where the applicant lives, personal circumstances, so they might look at age and previous study if you've got a degree already, and the university and the course that you are attending. So to apply for Student Finance England, you must normally live in England or the UK for at least 3 years prior to the start of your course, or have settled status. You won't be eligible for student finance if you're moving to England from another country in the UK to study, as you would be eligible for student finance from your own country. And if you don't meet the 3 basic residency requirements and your course is eligible, you might still be able to apply for a tuition fee loan or a maintenance loan, but you would need to check the student finance eligibility for this. So I would say if you're not sure about your eligibility due to your student status, your settled status or whatever, the best place to go is the Student Finance website. And there's an email address where you can contact Student Finance, or you can just give them a call. There's no age limit for those applying to a tuition fee loan, but they will look at, you might receive limited funding if you're over 60 years of age, or if you've completed an undergraduate degree. I'm assuming that most people on the course probably haven't already got a degree, but I'm happy to answer any questions about that at the end if you do fall into this category. And then they'll also look at the course that you plan to study at university. So it needs to be at a university, college, or other institution that offers like a bachelor's degree. So it could be a BA, a BSc. If you're applying for a foundation degree, that would make you eligible, as well as HNCs and HNDs. Most people on the call, I'm guessing you've applied for courses that would be eligible for student finance, but it is just something that they'll check. So the next section will cover how to apply for student finance and also how the repayments work. So this timeline kind of shows a very simple version of where, things you'll be doing in the academic year. So the main UCAS January deadline has passed. Applications for student finance open on Monday, the 23rd of March. I know that's really soon, but that is the perfect time to start your student finance application. I appreciate at this point, you probably don't know, well, some of you might know, which university you're going to put as your firm choice and which you're going to put as your insurance choice in UCAS. And you might not necessarily know where you're going to end up. You also don't know your results, so you don't know which university you're going to definitely end up at. By the way, this is for students starting university this September. My advice would be apply early, apply when the application's open with your best guess, because it is much easier to get your application in the system and then to update student finance after your results when you know where you're going to be than to leave your application late. Any finance application received from mid-June onwards is classed as a late application, and you risk not getting your money in time for your course starting. So I would say get that application in. Sometimes they're going to ask for extra evidence, so it can take a little bit longer. But this is the perfect time to start before you get too stuck into, revision, and then making nice plans for summer once you've finished your exams. So get that application in early. It also gives you time to get in touch with college or get in touch with student finance if you've got any questions about your application. So when it comes to applying for your tuition fee loan and the maintenance loan, you can do it via a paper-based application form, but this can be quite clunky. The much more user-friendly option is the online version. It's an online form which can be done in a couple of hours. So the form consists of multiple sections. So they'll be asking for your name, your address, household income information, and you'll be given a customer reference number. This is basically like your student finance ID number. So you'll be given that, and then you'll work through the form and sort of fill in different sections. You'll need to have a copy of your passport to hand to be able to upload. If for whatever reason you're not able to provide a copy of your passport, then you would need to send your original birth certificate. So another good reason to start that application early, because that can obviously take a little bit more time. Where it says eliminate sections, this is basically just putting in extra information that they might ask for, depending on your circumstances. And then finally, if you are classed as a dependent applicant, so you're financially dependent on your parents or carers, then they will be sent their own login details to confirm that all the information submitted is correct. It can take up to 6 weeks to process a student finance application, so make sure you check over all of the details and make sure that they're correct to the best of your knowledge. I'll also say that student finance have some really helpful, short, snappy videos on YouTube. So when you do come to applying, there's like each video is like 1 minute to 2 minutes long. I'd recommend having a look at them. You can also follow student finance updates on Facebook to keep an eye on key deadlines to apply. So when an applicant completes a student finance form, if they're financially dependent, then the parent or carer will be given an email within 24 hours with separate login details. And this is where you will need to put in your sort of financial information. So you'll need to provide your national insurance number and your personal income from the previous tax year. So if a student is starting university if a student is applying for student finance in September 2026, the financial information you need to provide is for the tax year 2024-2025. This is because it's the most recent full tax year at the time applications open. HMRC will then check the details, and if any information doesn't match their records, they might ask for extra evidence to ensure that an applicant doesn't miss out on any finance that they're entitled to. I appreciate that sometimes people's income can change significantly between tax years, so it might have changed since the previous tax year. If that is you, then you can submit a current year income form to be considered. And then when considering income, when you're estimating your income, it's important to include any overtime or extra hours, maternity or paternity pay, any shift work or contract work, pay rises, bonuses, redundancy pay, income changes, and income from self-employment as well. If you are I'll go back a step. So after the tax year finishes, you need to send evidence of what your actual income was for the year. So you're normally sent a form to fill in at the start of May. So that's how they work around the income. Some people might be self-employed and may not have completed their tax return yet. So you can fill in the form to ask to delay providing evidence until after the self-assessment deadline. Okay, so now sort of the repayment, and this is what I think people often think is like the scary part of student finance. I think it's the part that's not really commonly known about student finance. So hopefully you find this helpful. If I could stress one thing to take away today, it's that your student loan repayments are linked to your salary. They're linked to what you earn, not what you owe overall. Once you start earning above the repayment threshold of £25,000, you will pay 9% of what you're earning over that threshold. And I've got a table to help illustrate that, as well as some mock pay slips as well. As your income increases, your repayments will increase. As your salary decreases, so would your repayments. Anybody applying for student finance to start university in September 2026 would be on Plan 5 of the student finance and the student loans. The student finance that has been getting some press coverage recently about the repayment thresholds is Plan 2. So that wouldn't be relevant for students starting university in September. So it's Plan 5 that you'd be on. So the repayment threshold is £25,000 per year. Student finance does not affect your credit score, and they're repaid through the pay-as-you-earn payroll. So this is important when considering how it's viewed in the future, such as when applying for a mortgage. But your student loan repayments would affect your affordability checks, as it takes into consideration your monthly outgoings, but it wouldn't affect your credit score. Interest is added to the overall amount that you owe. So everything you owe is consolidated into one figure for repayment. So you wouldn't have the student loan, the tuition fee loan, and the maintenance loan to pay separately. It's all lumped together, and interest is added at the retail price index. So that's just worth considering when you look at the overall figure that you are due to pay back. So to illustrate sort of how the repayments work, we've got an example of somebody who doesn't pay anything back until the April after they've graduated, and they're earning over £25,000 per year. As the repayments increase, as the salary increases, so do the repayments. As the salary stays the same, the repayments do not change. At this point, it might be that somebody goes down to 3 days a week and their salary drops to below the £25,000 repayment threshold. For this whole period, student loan repayments stop. You're not paying anything back because you're not earning over the threshold. Then, as the salary increases, so do their repayments once they're over the £25,000 per year threshold. So if somebody was earning £25,100 per year, their student loan repayments would be 9% of that £100. So they'd be paying back £9 per year. So that's how the 9% thing works. So this is just a mock pay slip. So we've made some estimations about pension contributions, tax code, and things like that. But this is someone that would be earning £28,500 per year. So they've got a basic monthly salary of £2,375, and then you can see they've got their tax deduction, national insurance deduction, and then the student loan repayment is £26.25 per month. So their take-home pay is just over £1,800. We've also got someone earning a £30,000 salary. You can see that their basic salary is £2,500 per month, and their deductions go up, so their tax, their national insurance, their pension. The student loan repayments also increase to £37.50 per month. Then they're taking home around £1,900 per month. So hopefully that helps a little bit with the repayments and how it can look on a payslip when it's broken down per month. So I'm now just going to go through a few little bits of additional income that you might be entitled to, dependent on your circumstances. So anybody that's got somebody that's financially dependent on them at home, perhaps if you've got a child, or you are a young carer for somebody at home and they're financially independent on you, you could be eligible for extra support through the adult dependence grant, the childcare grant, or the parents' learning allowance. And there's more information about that on the Student Finance website. We've also got the Disabled Students Allowance. So this is known as DSA or DSAs. They help to pay for extra costs that a student might have as a direct result of their disability, long-term health condition, or mental health condition, or any specific learning difficulty such as dyslexia or dyspraxia. DSAs are additional support available to students who may otherwise be prevented from attending higher education because of a disability. So DSAs are available to undergraduate students studying full-time or part-time, as well as postgraduate students, so anybody that's doing a postgraduate degree, and they do not have to be repaid. The DSA also does not depend on household income, so the amount you could get relates to your needs up to the specified maximum amount, which last year, was £27,783, and I believe that figure is the same for next year, but it may have altered slightly. I will stress that there's not that many students that would get that maximum allowance because it is tailored to your specific needs. So if you apply for the DSA, you'll then be given a needs assessment, so they can have a chat with you to determine how they can support you at university. Taking out the Disabled Students Allowance does not affect benefit entitlement. So say if you're getting the Disability Living Allowance, this would not be affected by the DSA. It's also paid directly to the supplier of the service, or in some circumstances, it would be paid into the student's bank account. They're available to students that might have any of the following conditions listed on the screen now, but this list is not exhaustive, and other conditions not mentioned on the list you can see might be covered by DSAs. So there's a Student Finance DSA webpage that breaks things down quite helpfully to see if you might be eligible. So the types of things you could get help with the costs of could be specialist equipment. So for example, a computer if you need one because of your disability. It could be non-medical helpers, so a sign language interpreter or a specialist note taker. It could be extra travel to attend your course or placement to support with that, or any other disability related study support. So it could be having to print out additional copies of documents for proofreading. The DSA can support with that. So that's just some examples. I will also say that at BCU, we have a student support team who would welcome you to begin the conversation about support well in advance of joining the university. So we've got a team of pre-entry disability support advisors that can speak to you about what support you might get when at university, apart from the financial aspect, but also to advise on DSA applications before or whilst at university. The way you apply for the DSA is at the time you apply for student finance. So you can see that in your student finance portal and start the application. We've also got NHS Learning Support Fund for anybody that's doing an eligible NHS course. So you could receive an extra £1,000 per academic year for some specialist subject areas such as mental health nursing, radiography, learning disability nursing, any sort of relevant subjects. There may also be a reimbursement of excess costs incurred on placement for travel, as well as temporary accommodation costs if you're doing an eligible course. So it's worth having a look at the NHS Learning Support Fund as well. This is different to the bursary. So it shouldn't be confused with the NHS bursary. It is also funding, though, that does not need to be repaid. And anyone that's applying to do social work might be eligible for a separate social work bursary. And then something really worth researching is looking at whether there are any scholarships, bursaries or grants at the universities you're applying to. I used to think that scholarships and bursaries were only for students that maybe get like straight A's or are a world-renowned musician or something. But lots and lots of different universities will offer a range of scholarships, bursaries, and grants for different reasons. So lots of universities will look at household income, so you might be eligible for extra financial support. They will often give you financial support if you are a care leaver or a care experienced student. Lots of universities will offer financial support for young adult carers as well. So there's lots of different ways you might be eligible for funding that you might not have thought about. And although the terms can be used interchangeably, it's money that you don't need to pay back, basically. So it's money that would be yours to spend at university. Often universities will offer a range of different scholarships. So look on the different university websites that you've applied to, but there's also the Scholarship Hub website, which lists lots of different scholarships and things you might be eligible for as well. It does take a little bit of time to look into what's on offer, but it is well worth having a look at. And the university websites probably have the most up-to-date information about what's available at their university. You can also contact the universities and ask them. Every university you've applied to will have a team of staff that are advisors that can advise you about what's available. So at BCU, for students starting university in September 2026, we've got a range of subject-specific scholarships for the courses you can see on screen. So if anybody has applied for one of these courses, you would automatically get a £1,000 scholarship. So you would not need to do anything to apply for it. If you confirm your place at BCU, this would be applied automatically. Then we've also got our Accelerate Scholarship, which is worth £1,000, and it's paid in 3 instalments across your first year of study to support you as you transition from college, to university. And this is based on your home postcode. So if your home postcode is an area where it's got a lower proportion of people going to university, you might be eligible for this scholarship. There is on our scholarships website a way you can check your postcode to see if you might be eligible. So it's worth having a look at that as well. And then I'll also mention, although the deadline is just in a couple of days, this year we're providing 15 fully funded scholarships for students studying computing, engineering, or built environment courses, covering the cost of your university course. So you would get £10,000 per year, which would cover your tuition fees. And the little bit of money left over would be yours to spend. We've also got £2,000 bursaries that you can apply to as well. So have a look on the website, and you've got a couple of days to get that application in if you have applied for one of those eligible courses at BCU. Then we've covered different funding options that might be available to you, but there may also be additional costs whilst so you might be looking to earn money whilst at university. There's lots of different employment options you can explore at university. One I'd really recommend is getting a job at the university. So universities will run student ambassador programs, so you could get paid for showing students around at an open day. Or working in any of the catering outlets. There's lots of different jobs at universities that tend to pay quite well, because universities won't want you working more than 16 hours per week. They want you to prioritise your studies and getting involved in societies and things. So getting a job at a university, they normally pay a little bit better than in sort of outside of the university, in sort of restaurants and things like that. You can, of course, carry on with your part-time job, though, if you've already got one at university. There's also opportunities for a paid placement year or doing work experience placements during breaks, and our careers teams can help you find paid work as well as unpaid volunteering opportunities. And I know that any students on the call will already be using things like uni days, different rail cards and bus discounts. Martin Lewis's Money Saving Expert website is also quite good at letting you know when the best student deals are. I will say that for student finance, it's important that you've got students in the call have got a bank account, so you can receive that maintenance loan into your bank account. now's quite a good time to look at different student bank accounts, because they're quite often doing good deals at the moment where you might get a bit of cash for, signing up with a certain bank. So here are just some useful websites that we've referred to when pulling together the presentation, that you might want to go and have a look at. If you have got any specific questions about your own circumstances that aren't covered by what we've covered today or on the Student Finance website, I would just advise give Student Finance a call. They're probably the quickest to get a reply from, and they will give you the most up-to-date information. Now, for students that are in year 12, so might be thinking about starting university in September 2027, or any year 13s who might be taking a gap year, look out for something called the Lifelong Learning Entitlement. This is what the Student Finance system is changing its name to, and it's seen as a new flexible system. And it's designed so that students can access funding flexibly throughout their entire working life. So there will be a couple of things that are different about it. And repayments will be based on the current Plan 5 system. So it'll be based on basically credits rather than the number of academic years you've studied for. So when we've got more information about that, I'd be very happy to do a lifelong learning entitlement call, another webinar like this, or we can come into college and talk about it. But just look out for that. If you start seeing those words, that's what that is. But I will leave it there. I appreciate I've been talking for a long time on a Wednesday evening. So if there's any questions in the chat you need me to pick up, I can do my very best.
Lois, that's absolutely brilliant, thank you, and so comprehensive. We have had quite a few questions coming in, so I'm going to read through those as I scroll, so forgive me for that in a moment. But that really was very comprehensive, thank you very much indeed. And I think referring to, the NHS Learning Support Fund, etc., has been really helpful to encourage students who are looking at particular courses to understand they can attract extra funding. And it's worth looking at all of that on the Student Finance website. Faye will be putting some links in the chat shortly as well, in addition to those that Lois has mentioned. And certainly we would advocate that you contact Student Finance for confirmation of any kind of questions that Lois or ourselves can't answer in this particular talk. But just to refer, if I may, there's a couple of questions in there about eligibility and students with perhaps more complex visa status. We will be running a session with Amar Eason on a sort of surgery basis shortly after, going into sort of April, May time. And shortly after Easter, we'll be advertising to students to book into one of those appointment slots. And I really would encourage anybody who has a query on that to book a slot straight after Easter when we announce that, because that actually is very on a case-by-case basis to understand that. There are set rules and there isn't additional funding in most cases outside of the rules. So I would really encourage students to do that. If I can just go through this, the payment threshold remains the same for the 25k for the duration, doesn't it, Lois? But if they're on Plan 5, they stay on that sort of mode. So that's fine. Do any of the loans affect receiving universal credits? And that's an interesting one. If you were to attract universal credits in the future, I don't believe that Student Finance affects those. Is that right?
I don't think it does. It's generally considered as income for universal credit applications, but there are some exceptions. So it's worth contacting Student Finance to see about your own circumstances, I would say.
Thank you. The 9%, is it paid back over the £25,000 until you've paid back the total loan, or do you have to continue for the whole 40 years regardless of your salary? It is up until your loan is paid off, or the sooner, whichever that is, the loan paid off, or 40 years. Am I right with that, Lois, as well?
Yes, you are. Yeah. And so some people do choose to, you can overpay your student loan repayments, so you can pay more than that 9% if you want to, but it's worth having a look and seeing if that's actually beneficial for you or not, because for some people it's actually not financially beneficial to do that. But again, there's lots of stuff, resources online, and Martin Lewis is quite good for advice about that.
That's brilliant. And at what point interest is added to the loans? I think there's literally just a very few months. Is it a year grace or a few months grace, Lois? I know.
I can't remember, so
No.
it's worth having a look, and I can have a look
Yeah.
and check and send that afterwards. But I think it's
Thank
quite
you.
soon that it does
Yeah.
start getting added.
Yeah.
So one thing to just be aware of about student finance is quite often, after your first year of earning money after graduating, the amount you owe overall can actually be bigger than what it was at the beginning. But that is why you sort of see student loan repayments as more of a kind of like a tax, I guess, rather than, so think about it as being linked to what you're earning rather than that overall figure that
What
you
you owe.
owe.
Yeah, that's really helpful. Mentally, I think that's helpful because we want students and parents to be really reassured that this isn't sort of punitive in that sense of owing. It is actually based on earnings, and as you say, is considered a tax. Does the NHS Support Learning Fund apply to medicine? That's a good question.
I think so. Let me just pull up that.
I'm not sure that it does actually, but Lois, that's really interesting.
Yeah,
if
I'm
you
not
could just
sure.
check that. Okay, if you could.
No, sorry, I was getting confused with dentistry. So dental
Yeah.
therapy, it does. Medicine, I don't believe it does,
No.
but it's worth just double checking that.
Yeah, I don't believe so either. That's fine, thank you. So I'm just going through. Faye's put lots of loan. We will be sending out the slideshow. If you're sending 2 uni students at the same time, does that make any difference in the amount of loan you can obtain? That's a good question.
Yeah, they will consider that actually. So there is a form you can complete as part of the application to let student finance know that you'd be sending 2 uni students at the same time. So it is considered, but it's a case by case thing as to how much it would be affected.
That's brilliant, thank you. Let's have a look. Did you say that universal credit is counted as income for parents? I think if I remember rightly, there's a section on that within the application for student finance. So I think that will become obvious, and I think it is taken into consideration, but it's actually sort of put into a separate section, like any income from pensions or anything else is slightly separate and noted separately from direct income from PAYE, as far as I know. Double check through the student finance on that one. And does the interest get added to the loan amount and then interest added to that total amount? That's a good question, and I think Martin Lewis is really hot on that sort of thing, and I must admit I believe that it may be. But I think, again, I'm afraid that's not my area of expertise. Lois,
Yeah,
you haven't?
I'm not entirely sure, but I'm not entirely sure. But I know that sort of the total amount, when it gets all lumped together with what you owe, interest is added to that each year.
Yeah, so I think that would be worth, again, looking at the calculator, looking at the checker on the student finance website. Apologies for being a bit vague. It is a complex field, and there are certain things that we know as a jack of all trades, but actually those are quite sort of specific questions, and I think you'll find a lot of those are answered in the FAQs on the student finance website. So Faye's been putting some things in there. So a couple of things that we had asked, looking just to mention as well, the deadline date. You've said that the 23rd of March is the opening date, which is next week. Really helpful, Lois. So I would encourage students and parents, as Lois said, to get in as quickly as possible with that. The deadline date for applying and absolutely guaranteeing that your money will be there in advance is the 15th of May. So it's really important that you get it in before the 15th. It isn't that it won't be accepted. It will indeed. If you apply on results day through clearing, you will still be eligible for student finance, but the difficulty is in receiving that in time. And we would really encourage students and parents to be really alert on the deadline dates, because although it's not a deadline as such, it is actually an equal sort of consideration deadline by which you will be guaranteed that that will be with you when you start university. So really do take note of that. And as Lois said, encouraging you to do that based on your current knowledge of your choices. You can change that afterwards, that's not a problem. I think, do the documents say what interest rate will be? Yes, it does. And I think all of that is again available. You have run through that on the slides with the 9%, I believe. That's right,
Yeah.
isn't it, Lois?
And then the interest that's charged on sort of the overall amount you owe is in line with retail price index, which I think is around 4-ish%. Right?
Yeah, something like that. So again, that is specified. It's really important that you do understand the commitment that you're making, but to be encouraged by the fact that that is all based on what you owe and how that's worked out over the 40 years. From a year 12 perspective, the LLE that Lois referred to, we will be putting out more information as soon as we can for current year 12s. That will sort of be more apparent as time goes by. The one thing I can say is that tuition fees are going up to just over £10,000 for that following year, and therefore it's really important that you understand that that extra amount from the 9,000 etc. this year will be going up to 10,000, but again it's based on your income and it will be based on the plan 5, but the cost is more expensive for the tuition fee loan. Okay, so I don't think we've got any other questions that have come in from parents and students, Lois. You've been absolutely brilliant in answering those questions. Parents, if you do have anything that you can't find on the Student Finance website, I would encourage you, students and parents, to email careers@keds.ac.uk. That's careers@keds.ac.uk. We will circulate a copy of the recording to all those who've been on the call this evening and make that available as well on our website so that everyone can kind of have a good look at those slides that Lois has put in front of you. And we will circulate further information as you go through in the end of year 12 into year 13 as well. Lois, thank you very much indeed. I hope students and parents that you found that really useful, and we look forward to seeing you on our next speaker series, and we'll be giving you more information about that in the parent newsletter. So thank you very much for this evening. Good night to everybody. Thank you, Lois.
Thank you very much. Good luck with everybody's exams as well.
Thank you.